welcome to the Parallel Systems broadcast. I'm your host Mike, and tonight we're going to be talking about the potential for a revaluation in both gold and silver. So positive news tonight, we're not going to be talking about none of the craziness that's out there. We could be talking about those freakish Olympic Games ceremonies, but no, we're going to leave that one aside. We're not going to talk about magic bullets and ears that miraculously regrow in a couple of days. None of that stuff. Sticking to the positives. We're going to talk about this Ponzi pyramid, which I think I first introduced on the channel about 2 years ago now. 2.5 years ago, maybe. I'm not even sure, but it's done the rounds since then. I've seen this thing turn up all kinds of places. It turned up on some other people's channels. It also turned up in an article in China. So it even made its way to China. In fact, I've heard that Xi Jinping has a little framed copy of it on his bedside table. And so he might, because of course China is mining a lot of gold. So this pyramid would look very appetizing to him, because of course if this pyramid comes down, and that's essentially what it shows, is what happens in a mega debt collapse. Because everything that you can see in the top half is essentially a financialized asset besides the bottom two. Now let me just show you what I based this off. It was something called Exters Pyramid, and John Exter was a central banker. He was the first governor of the Central Bank of Ceylon. So he was working for the US and he was a central banker. He liked gold a lot, and he was buying lots of gold going into the late 1960s because he understood that the world, even back then, was swimming in debt. Now, of course, there was a currency reset in 1971. There was a financial reset in that the US defaulted on its obligations. Now, from his vantage point going into the 1960s, he thought, well, when the US defaults, there's probably going to be a hyperinflation or a collapse of the global financial system. And he was trying to understand how that would look, how this debt pyramid would collapse downward and it would do away with certain loans, and values of everything would start to shift. And he understood that gold as real money, historically it's always been money, would then be the barometer by which everything else was measured. Now, my pyramid is how do you say period? My pyramid, I've not got one of them. I'm not one of those, I said I wouldn't talk about the Olympic Games. Let's move on. So, moving forward, I've completely stumped myself here. So, my pyramid basically is a modern day interpretation of that, because of course the financial system didn't end in 1971. It was a new iteration of it. It continued on with oil now being the backing of the currency because of the deal with the House of Saud. And we know all about this one. We spoke about it just recently when we talked about those fake articles, the fake news that everyone was sharing. Well, here we are, 2 to 4 quadrillion at the top. That was when I first made the pyramid. I estimated it was 2 to 4 quadrillion in derivatives and unfunded liabilities. Now, that was speculative because at the time, nobody was using the 2 to 4 quadrillion number. In fact, most people were using 600 trillion as the number. That was the official Bank for International Settlements number, which I just thought was an absolute joke. It was completely ridiculous, but people were using it. Then interestingly, something happened about a year ago. I think it was George Gammon was the first person who came out and said, oh, it's 2 to 4 quadrillion. And it was because the Bank of International Settlements revised their own estimate to a 1 quadrillion. And he said, well, if they're saying 1, it's 2 to 4. So now all of a sudden 2 to 4 is the number that's being used. But let's face it, guys, it's probably gone up since then. Who knows what it is now? Is it in the quintillions? Is it in the sexy sextillions? Is it in the reptilians? I don't know. There's lots of tillions, rillions, billions. Who knows? But it could be in the reptilians by now. It probably is. I see a lot of them around. So 2 to 4 quadrillion in derivatives, they are all going to disappear. They cannot be fulfilled. There's not enough money on planet Earth. There's only 40 trillion in paper currency. There's probably about 150 trillion if you factor in things like M2. So it's not going to be repaid. It has to collapse at some point. As we know, when people print money, or should we say currency, when people print currency, they only have the principal. There is never the interest that they attach to it. And that's why it expands and gets bigger. And then, of course, if you create derivatives, which are essentially taking an asset and then creating bets on top of that asset, then people make bets upon the bets. Then people make bets upon the bets upon the bets. And it just expands into this nonsense where you've got quadrillions. So that will never be repaid. That will collapse. Beneath that, we put anyone or anything that cannot repay debt. So this was commercial real estate, corporate bonds, loans. Of course, if the whole system comes down tomorrow, that collapses too. Then we get to equities and bank deposits. They're all going to get taken. They've already told you. They laugh about it behind closed doors. They say when the collapse happens, they are going to bail you in. They're going to take your money. Now, even if they didn't bail you in, it wouldn't matter. The currency would be hyperinflated and it would buy you nothing because, of course, those pieces of paper are worthless. Government bonds, fantastic. Government bonds, they're destroying pension portfolios right now, but that's only the start of it. If the system comes down, they'll all be defaulted on. Then you get to paper currency. There's 40 trillion in these nonsense notes, but of course they can be printed to oblivion. And we're going to talk about that later because we're going to talk about the Weimar hyperinflation and how that affected property prices. And what was the cheapest you could have bought a property for in Weimar, Germany in gold? So stick around for that one. Of course, underneath that, this is where my pyramid changed from all the past pyramids because I put those commodities and land. And you can't really default on commodities because if you own them outright, which is what I put here, non-monetary commodities owned outright, it's yours. So maybe you have a collapse in the value of oil, which we saw in 2020, but at the end of the day, you've still got oil and other people need the oil. So it doesn't matter what it says on paper, they have to pay you whatever you charge if they don't have it themselves. You could say the same for wheat. People need to eat, people need to drink water to survive. So commodities are very important in a financial collapse. And then underneath that, I put land because there's only a finite supply of land. And what I actually put was debt-free farmland, forest, and self-sufficient homesteads. Now, why did I put that there? Well, it's easy to say to survive a financial collapse, you need some gold and silver. But at the end of the day, unless you find a way to digest and energize and metabolize, should I say, gold and silver, it's not going to matter. It's not going to matter because you're going to have to buy things from people who produce, and maybe you can't buy things, so you need to survive. It's the same with Bitcoin. You see all of these computer nerds saying, well, I've got Bitcoin, I'm going to survive, I'm going to be rich, I'm going to have a Lambo. No, you're probably going to starve to death because you can't cook, you can't clean, you still live in your mum's basement. It's not going to happen, my friend. You need to learn skills. You need to learn how to look after yourself and have resources close to hand. So you need to have a homestead, or at least be around homesteads, people who grow, people who create commodities. That's why I put that at the bottom. Then, of course, we talk about monetary assets, and here's where it gets interesting. Because if you look at global wealth, there's around 350 trillion. They say around 350 trillion in global wealth. I've had other estimates of around 350 to 400 trillion in real estate and 100 trillion in infrastructure. So let's kind of go down the middle. Let's say around 500 trillion in actual real stuff, excluding underground commodities. So there's 500 trillion in above ground wealth. Now, just to give you an example of why gold and silver is so important, if this pyramid collapses, if all of that is done away with, what we are left with is all of the real stuff. So all the financialized assets, they're gone. They go up in an incineration. Then we've got all the real stuff. Now that real stuff has to be revalued in what? Well, of course, it's going to be gold. That's why China's buying up all the gold and mining all the gold. That's why Russia's doing the same. And that's why America is terrified of it, because they understand that gold will be the only money. It goes back to how it used to be, because that's the only thing that really works. So they go back to gold, and now we've got 500 trillion worth of infrastructure and property. So what would the price of gold have to be? What would be the nominal price of gold to factor in that 500 trillion if we had to revalue it in gold? Well, it would be about $75,000 per ounce in today's money. So that would be a revaluation upwards, meaning you could now buy a lot more for your money. Now, I'm not saying it's going to go there, but I'm trying to give you an example of how throughout history, gold has actually been valued at all different levels. Not nominally, I'm talking about what it will buy you. And if we have a collapse of a system, which, let's face it, my friends, if you're looking at a pendulum swinging left and right from true value and real value and real assets, real living, real everything, real relationships, real communication, where we are is the opposite end of that pendulum. So we're in the fake everything, fake food, fake living, fake relationships, fake activities that people do for enjoyment now. Everything's fake. Everything's artificial. We live our lives through these black boxes. But particularly financialized assets, everything there is fake. The derivatives, completely fake. It doesn't have any semblance to actual real assets. So what's going to happen is it will swing back the other way, and therefore you'll have a revaluation in money, which is gold. It will buy you a lot more. That's my thesis. That's what I think is going to happen. And there's good reason to think that. So let's talk a little bit about the Weimar hyperinflation, because the Weimar actually we'll start with this one. This one's an important one because it gives us an idea of where we are in the timeline. This is Ray Dalio's Rise and Fall of Empires, and I've been speaking about this a lot on the channel recently because what you can see taking place in the world right now is the setup for the end of one empire and the rise of a new one, a new epoch of history. And that's why they're getting very desperate. That's why we're seeing all of this chaos unfold, because that's what happens at the end of an empire. So this is the end of a very big cycle. It's a very big cycle. And if you listen to my recent episode on the Venetians, you'll understand that was the start of this cycle. It wasn't when America got the reserve currency. It wasn't Britain. It wasn't Amsterdam. It was all the way back in Venice. That was the start of this cycle. So you need to understand this is a huge cycle. It's a 500 plus year cycle, and it's swinging back the other way now. So they let the East decay whilst the West rose, and now it swings back the other way. The West will quickly collapse and decay, and you'll have the East rise. Why do I think that? Well, look around. It's already happened. The capital base of all the elites is moving towards Saudi Arabia, China, of course, Sri Lanka, all of those places, the Philippines. And what you're going to see is the standard of living and the wealth over there is going to rise. Now, their system is going to be based around gold. It's already happened because they've already got such massive reserves. Russia's a part of that too, hence why we've got a war right now between Ukraine, US, and Russia. And we're also seeing conflict now rise with China, which has been happening for a long time. But if you look at what Trump's speaking about, he's speaking about 100% tariffs on China. You've got J.D. Vance, who is really not a cool guy. He's not a good vice president pick. Really good friends with Peter Thiel, really good friends with a lot of the Silicon Valley bigwigs. And they're essentially already preparing to transfer more power over to big tech and Silicon Valley. And also he's got a ton of investments there too. It's going to be very lucrative for him, very lucrative for Donald Trump too. In fact, Donald Trump's son-in-law, Jared Kushner, he's actually now he just flew over to Montenegro and Serbia, actually, where they're planning to do a lot of investment in digital infrastructure and also property as well. So they're already setting up to get very rich on this. Trust me, guys, they're not your savers. And if you think that, you've lost your mind. Okay, let's get to this one. So we know what a good virtuous cycle looks like. It's when you've got a strong leadership. It's when you've got a nation that is very creative, very inventive, lots of innovation, education, infrastructure is being built. When we talk about good education, we're talking about young people that are being taught real things, not being indoctrinated, not what we saw at the Olympic Games. Oh, I said it again. I shouldn't be talking about it, but I'm going to anyways. Good competitiveness, strong income growth, and strong markets and financial centers. Everything that we're seeing in China. Now, people say, well, China's got a real estate bubble. That's nothing. Doesn't matter. The US had plenty of financial crisis in its ascendancy. So did Great Britain. People don't remember this, but in Great Britain at the height of the empire, we had a massive collapse. It was the railways. And yeah, that always happens when you've got tech innovation. You'll have bubbles and then they'll collapse. But what matters is, are you creating good foundational pillars to ascend into a place of strength? And that's what certain nations are doing. Now, maybe it's not going to be China. Maybe it's going to be India. I don't think so. But it could happen. Now, once you get to the top of the cycle, you essentially start to lose your competitive advantages because other people do things cheaper. This is where the US was, let's say, from 1950 to 1971. And they started to transfer their their industry and manufacturing base over to other countries who could do it cheaper. Now, that's the start of the end, because now you're giving them your advantages, your intellectual property. They're getting rich, and you're getting what? You're getting indebted, which takes us back to the pyramid. That's how this began. Remember, prior to 1970, we didn't have all of these financialized assets. People didn't even have a pension in the financialized asset realm. What they had was land. People who wanted to invest would invest in real stuff, and money as well. They'd invest in gold, real stuff. It was only after 1970 when you had this massive mega explosion where everything was pushed into this closet that they marked outside, financialized assets, and it was bullshit derivatives. It was bullshit products, and that's why we've got the system we've got now. I was listening to somebody recently talk about their pension and how their pension is if you think of a pension today, it's essentially built on a lot of bubbles and bonds, all of which can go like that. Now that's somebody's future wealth. That's how removed and detached from reality people have got, in that they've trusted everything to a system in which overnight it could just disappear. That's wild. That's crazy. Of course, you've got some people who have property as well, and they're more diversified. But even then, property is in a huge bubble in most countries. So it's a very dangerous time. A very dangerous time indeed, especially if people don't have gold or silver. So going back to the cycle here, we can see that from the top of the cycle, we essentially started to trade off real growth for debt-fueled growth. And it wasn't a good trade-off, because they were buying growth at, let's say, $1, and for every dollar they was getting 50 cents worth of growth. I think today it's something like 25 cents or God knows what. It's basically indebting yourself until the collapse comes. Now, this is where we are today. Large debts. We've got debt to GDP ratios over 100 in most developed nations. And where is it that we're seeing low debt to GDP? Well, the lowest in the G20 is Russia. Well, just think about that for a second. The country that is being attacked and they're trying to bring down has the lowest debt to GDP. And this year actually has some of the best growth in the world, actually. Some of the best growth in the world, because the war is actually leading to financial growth over there. The poorest regions have got the largest bank deposits they've had ever. So, it's all backfiring. It's not working. And the confiscation of assets is backfiring too, because they're just doing tit-for-tat confiscations. So it makes sense how this is all playing out geopolitically if you understand what's actually really going on. There's going to be a reset, and all of these countries are vying for a better position in the reset. The US is trying to bring Europe into its sphere because, of course, it doesn't want to lose its little empire. So that's why we have Europe now essentially dependent on US LNG, when we could have had cheap oil and cheap gas coming from Russia. So once you understand the geopolitical conflicts, how they fit into this cycle, it all makes a little bit more sense. Printing money, internal conflict. Now, the US has already had a lot of internal conflict. Loss of reserve currency, weak leadership. Well, you've never seen weaker leadership than what we've had the last few years. We've had Biden stumble and bumble and crap his pants all the way through his presidency. It was an absolute disgrace. I feel sorry for Americans, complete total embarrassment for the country, but of course it's not them, it's the political class. Now we're going to have Trump again. It's just a shambles. This guy with his orange tan and his magic ears. Then we've got Civil War and Revolution. Now, this doesn't all happen in order, of course. The Civil War Revolution, which I've spoke about on the channel, that could happen at any point, and I think that's what they're setting up for. Now, there is an arbitrariness to all of this. There is a lot of engineering happening to speed this up. Unfortunately, that's just the way it is. And that's why they need to have this toing and throwing from one side to the next. They need to have new leaders come along that ignite one side and offend the other side, then vice versa, because it takes them forward. You need that energy. Otherwise, it will just stagnate. Okay, so that's where we are now. This is where we're going to. Now, let's go to the Weimar Republic and let's have a look at during the collapse of the Weimar currency. And what I wanted to point out here is that as a currency hyperinflates, which is what's going to happen to all of our currencies, what you end up with is massive disparities in price. So nobody during a hyperinflation knows what to value something at. And what becomes extremely valuable is things that have intrinsic value, particularly monetary assets, which is gold and silver. Now, they're always valuable, but never more valuable when the things that people have put their trust and faith into are collapsing. Because then people panic. They realize, oh shit, I made a mistake. I put all my money into bonds. I put all my money into stocks. I put all my money into paper currencies and bank deposits. And that's all been taken from me. So now they're scrambling. They're rushing out. But there's a limited supply. And the people who do have it, they hoard it. They say, I ain't giving it to nobody. Nobody. In fact, even during the French hyperinflation, when they threatened people with death for hoarding gold or using gold or trying to spend gold, people still did. Because at the end of the day, there's nothing else to do. I mean, if you give it all away, you're going to die anyways. You're going to starve or you're going to end up in some kind of slave type system. So people ain't going to do that. They're going to hoard it. However, during the height of the Weimar hyperinflation, so towards the end of 1923, you could buy a property still for around 1 billion Reichsmark. 1 billion Reichsmark. Now, you might say that's a lot of paper. It was a lot of paper. But here's the kicker. 1 billion Reichsmark was about 1.5 ounces of gold at the time. So that was the disparity. That was when nobody knew what the price levels were. So you would get 1.5 billion Reichsmark. No, sorry, you would get a billion Reichsmark and you could buy a house for 1.5 billion Reichsmark. So basically it was 1.5 ounces of gold to buy a property for a time going into the end of the Weimar hyperinflation. Now, I've always said that gold will be revalued twice in our lifetimes. It will be revalued twice. It will be revalued on the way to the collapse of the currencies, because during that time, people rush to it and therefore the price will naturally go up. That's exactly what's happening now. So I've been saying since the start of the channel that this would happen, that we'd see gold 2,000, 2,500. None of this should be surprising anyone that's been watching the channel for a long time. This is the first revaluation that we're seeing. We're seeing it being revalued again and again and again. And that happens all the way up until the end of the currency, till the collapse. And then comes the second revaluation, which is where they all get together and they revalue it against all the existing assets. And that is where the numbers could go crazy. So $50,000 an ounce, $75,000 an ounce. Now you might say, well, that's nuts. It's never going to happen. But you have to look back at financial history. For example, if you look at the oil to gold ratio, today, if 1 ounce of gold will get you 28 barrels of oil, 28 barrels of oil for 1 ounce of gold. And the highest you can see on this chart is in 2020 when the gold price went negative for a time. But it wasn't really negative. That was because of the Ponzi paper markets. It was about $40 per barrel. So you could maybe have got 90 barrels of oil. But if you go back throughout history, throughout American history over the last 100 years, you could actually buy a barrel of, you could actually buy for 1 ounce of gold over 200 barrels of oil. This was back in 1931. You could buy 206 barrels of oil for 1 ounce of gold. Now, that wasn't because of a hyperinflation. It wasn't because of a currency reset. That's just what it was. So all of these things can reverse. And I think that's what happens. You go from fake back to real, that big pendulum swing. Now, okay, so I'm going to shift back to this screen. I'm going to quickly check the chat before we go. I'm going to see what other people say. Is there any reason to pay off the national debt since it was occurred on behalf of the people without their consent? Well, you tell me. Is it possible to not repay people? Is it possible to not pay off the bankers? It doesn't seem so. You know, if you look at what's happened across the world, they just restructure the debt again and again and again. And if people or nations refuse to pay, or if they bring in somebody into power who refuses to pay, usually that person gets some kind of revolution, or there's a war that's put on that nation. Now, there is a good example of somebody who did manage to pay off the debt by kicking out the bankers and taking back control of their natural resources, which is the only way I've ever seen it done historically. That person was actually Vladimir Putin. So he did that in the year 2000. He became president in 2000. At the time, Russia's energy was controlled by a small group of oligarchs. Lukos Oil, I think that's the name of it, was controlled by Mikhail Khodorkovsky, and also behind him, the true owner was Jacob Rothschild. Now, Putin knew this, so when he came into power, Russia was the highest debtor to the IMF in the world at the time. They had more debt owed to the IMF than anyone else. So what he did was he put Khodorkovsky in jail for tax fraud, and he also rounded up all the other oligarchs, and he said to Khodorkovsky, if you don't pay this massive tax bill, I think it was around 28 billion, then we're going to nationalize the company. Now, of course, Khodorkovsky couldn't pay it. And what happened was when he got put in jail, all of his shares, there was a mechanism, a dead man switch that switched them all over immediately to Jacob Rothschild. So all of his shares went to Jacob Rothschild, who was the true power behind Khodorkovsky. So now Rothschild's had he had the debt, Jacob Rothschild, and he said, well, I ain't paying it either. So Putin said, fair enough, we're taking all of your assets. He took back the company, Lukos Oil, which controlled, I think at the time it was around 25-30% of Russia's oil. And what he did was then use the profits from the oil production, because oil prices were good back then, to pay off the IMF. So that was a fantastic mechanism to get rid of the bankers, and he did that. He paid the IMF off, even though they were the largest debtors, and they had apparently, I think it was 2008 they was meant to pay them off. He paid them off by 2004. And since that time, Russia has been extremely fiscally conservative. Now, there's many nations across the world who have the power to do that. Lots of these countries in the global south, lots of countries in Africa, they've got a ton of commodities. But why is it that they never get to do this? Well, of course, it's because they control the politicians who get put into power, and they make sure that nobody does that. Argentina could have done this. Instead, they got this guy, the crazy head guy, and he's now just saying, yeah, we'll restructure the debt and we'll take more loans, which is exactly what they want. They want you to continually pay out interest. That's all they care about. They never want you to repay the capital because that stops the fun. So can it be fixed? Can we just default? I don't know. I don't think it's going to happen unless there was some kind of social revolution. Somebody else said, Gerald Celente has been talking about the high rates of unoccupied office space in the US for since, quote, the Divock War? Thanks for that. Yeah, you saved the channel. You did it the right way. And how banks will go under as a consequence. Yeah, there's massive... I mean, commercial real estate is one of the worst things to be in during a giant recession because, of course, people just default and will refuse to pay their loans back. So there's going to be a collapse in commercial real estate. I think we're going into a massive recession in the US. I think the numbers are going to be awful. I was looking recently at US citizens who are going out to eat, and the rates of that have collapsed. So people going to restaurants, even people going to eat fast food, it's gone down about 40-50%. It's actually worse than at the depths of COVID. So makes sense of that one. That means people are really struggling. Now, at some point, that bleeds out into all of the other metrics. They're hiding it right now, but it's going to happen. And it's going to be a mess. And yeah, there'll be a big recession from it. The only thing they can do is if they have some massive crisis, then of course people will maybe take on more loans. Maybe there'll be some more stimmy checks and it'll be more funny money. But then the inflation comes and the inflation will be far worse. So that's where we are right now. It's like a car. And there's debt default and collapse, like monetary collapse on the left, and there's hyperinflation on the right. And they're out of control. The whole system's out of control. So the car's veering to the left and they spin the wheel hard to the right. And that's where we are. Right now, we're going towards the debt collapse. And if they don't print again, that's what will happen as we get towards the end of this year. But they won't. They'll spin the wheel back to the right and there'll be some event that justifies a lot of spending because they can't afford a depression the likes of which we will have if this goes down. So there will be more money printing at some point. They'll need an excuse for it. I think that's what they're setting up for. I think that's what Donald Trump's going to do when he gets in power. If he does, he is going to be the guy who prints a lot. The debt will go sky high. He'll say it's for growth. He's got JD Vance in there who's going to absolutely open the doors for big tech to just run wild in America because that's what he invests in. Yeah, it's going to be bad times. There will be a time, though, where, of course, we have a little bit of debt-fueled growth, so that's something to get ready for. Somebody said, if you don't hold gold when SHTF, you likely never will. Exactly. You know, if you haven't read your history, then it's probably too late. Well, it's never too late. That's not fair. But if you haven't read your history or you don't get up to speed on it fast, then yeah, because when it happens, it will happen very quickly. GG says, so important to hold a diverse portfolio to protect yourself. PM's physical money outside the banking system, land, food supply, cancelled my pension too now. Smart, very smart. And I think, you know, I was speaking to someone recently and they said, Mike, do you think my pension will be there in 10 years? And I said, 10 years? 10 years? I said, it might not be there in 2 years. But the point is, even if it's there in 10 years, what's happening right now is they are pumping up asset values, but the true value of those assets are falling. And that's the difference between nominal and real. And you have to understand that. Nominally, something can go up from, let's say, 100,000 to 200,000. But if that 200,000 buys you less than when the asset was 100,000, you've lost money. The numbers have gone up, but you've lost. That's why people are going to gold now, because gold is protecting their purchasing power. Of course, what we're going to see in the coming years is they're going to continue to try and inflate these bubbles. But if you've got a pension today, well, in fact, I'll give you a story. I know a guy who had a pension and he lost it was around 50% of it going into the GFC. So he was meant to retire in 2009 and the GFC happened. He didn't retire because he couldn't afford to anymore. And he worked for another 12 years, right up until 2022. And the poor guy had to live through 2020 when he nearly had a heart attack seeing his portfolio collapse again. But guess what? He worked 12 years for nothing. You know why? Because even if he'd have took the value of his pension when it had collapsed 40-50% in 2008, it would have bought him more than the pension he got in 2020 because of inflation. When he took it, by the time he got it, it was 2023. We had inflation running so hot. He'd have been better off taking it probably back in 2008. Or there wasn't much in it, let's just put it that way. That's the problem. And that is what's going to happen over the next decade or so. So I think the smart thing to do is to get your wealth stored in something that's going to protect you during these crises. And that's why, of course, we go to the pyramid and we look at the pyramid and we say, well, a lot of those assets are in bubbles. Some of them are going to lose 50, 60, 70% of value as the system collapses. Gold's going to get revalued along the way. So why worry about it? Why take the big risks? Now, there are ways to maneuver it, of course. The way that I would do it is if you have been in the smart position for, let's say, the last 5 years and you've seen your gold holdings go up 100%, 140%, depending on the currency you're in. Now you can take a small bit of that. You can take maybe 10% of that and use that to speculate. Use that to speculate, to buy mining stocks when they collapse in value before they reflate it. Use it smartly. And then you can turn 10% of your portfolio, well, 10% of your profits. It's not even 10% of your portfolio. It's probably far less than that. You can turn that into something that goes up 15x or 20x. But there's no risk to you because you've already seen the profits from the revaluation of your gold holdings. That gives you a massive foundation of wealth that's protected, it's safe, but from that you can harvest a little bit and use that for speculation. That's the smart way to invest right now, in my opinion. It's certainly not to have your portfolio 80-90% in financialized assets. That's wild, knowing what we know, but some people are doing that, and that's unfortunately what's going to lead to a lot of people getting wiped out. Hey Mike, it will get real when they shut off the grid. Yeah, it will. The Middle East and Africa is the new growing zone. That's why Russia and China are pouring money into there. Yes, they are, and that's where there's going to be, there's a lot of toing and froing between the West and the East over those places as well. Of course, we're going to have some really hard times in Europe because there's a lot of young people that are being migrated in. In fact, I'm going to do an episode on something called youth bulge. Hold your horses, I know what you're thinking, it's not that. So we're going to talk about something which is where you have a lot of young people at the lower end of the demographic spectrum, particularly men, and how that affects societies, because I think unfortunately Europe's inviting a lot of young men from a different culture, and we know how that unfolds. So I think that's something important to talk about, and I'm going to show you some of the historical impacts of that. Also, we have to think about China. China's got the same phenomena where you've got a lot of young men, and usually that's when you have nations that go to war, when there's lots of young men and there's not enough outlets for them in society. Now, China has that problem. Youth unemployment is going up. So those are the times when you often see nations push their youth towards the military, particularly young men. So that doesn't spell good times in terms of global conflict. Somebody said it's impossible to pay off the debt. Money comes from debt. If we paid it off, there would be no more money. Exactly. That's the problem. You've got the principal and then you've got the magic bit, which they create on top of it. And that's what the bankers are harvesting. That's what they do. Bills of exchange, somebody else said. And somebody said if you participate in the system and use dollars and trade time for dollars, you consent. True. This is something that I talk about quite often, is that ultimately, it's the people who prop up the system. You know, we prop up the system whether we like it or not. We are propping up the system, and that's why gold is a vote against the system. That's why I have always liked it. I'm not a gold bug, but I just think it's a vote against the system. It takes capital away from the system for them to add to that Ponzi pyramid. If we go back to our pyramid over here. When you buy stocks today, we know that the stocks are being rehypothecated to prop up the top level. So anytime we put something into the system, whether that's our bank deposits, whether that's shares, unfortunately, it is propping up this system. Now, does that mean that we should take it out and try and collapse the system? No, a collapse in the system would be catastrophic. So I don't think with that mindset. That's not a healthy mindset. Nobody wants to see it collapse, but unfortunately it's going to collapse. And maybe it will be better on the other side of it, but of course there'll be a lot of people that tragically will lose everything they've got. And my hat goes out to people that are going to lose a lot. That's why I make these shows, to try and give people some advice and information that will give them at least a fighting chance. But I think it always comes back down to self-sufficiency, you know, taking care of yourself, having some access to resources. You're not going to be able to eat gold, silver, or Bitcoin in a crisis. That's not going to work. You know, that's for protecting wealth on top of what you've already got at home, just to keep yourself survival, basically basic survival. And fortunately, a lot of people are doing that. And I think that's the most dangerous message. That's the message they don't want people to hear, is that you don't need the system. You can take care of yourself. The system is a parasite upon you. But if you feel you need it, if you feel you're dependent upon it, and you actually live in that space of dependency, then of course, yeah, you help to propagate it. So that's why my message is one of self-sufficiency. Okay, I'm going to leave it there for tonight's live stream, everyone. Thank you, everyone in the live chat, for joining us. I hope you enjoyed this little live stream. I do have some charts that I'm going to be putting out on Patreon. So also newsletter this week. So for people that don't know, I'm doing pretty much weekly newsletters now. So I do about 20-30 minutes each week because things are moving so fast. So if you want to check that out, you can go over to the Patreon. And thank you to all the patrons and, of course, my YouTube channel members. Don't worry, guys. I don't forget about you. I appreciate you all for being YouTube channel members, and I'll give you all a shout out in the coming episode. So again, have a great weekend, and I'll see you all in the next one.